And it's 1:30 p.m. Welcome to Update from the World of Business on Business Incorporated. Here's what we have for you on the program today. As tension continues on the Black Sea, we'll give you the impact on the maritime trade. And IMF commends Zimbabwe for its 2024 budget. Rwanda will soon be boosting up its fertilizer production. It will be at least 100,000 tons a year. Welcome to the program. I'm Ini John Mekwa. We start as usual with what's going on in the market. Beginning from home, we see that the NGX is sustaining, in fact, building on its gains from yesterday. At intraday, it was up 0.28%. at 72,672.134. JSE of South Africa, a little less gain than yesterday, but still gaining right there, 0.17% at 74,970 at intraday. We look at the EJX of Egypt, and it's on the flip side, marginally 0.03% at 25,067.91. Kenya is still on that losing streak, lost 1.29% at the close of trade yesterday. Is now at 89.99 for its index points. To the Middle East now, where we see a mixed sentiment for Abu Dhabi. It's marginally down 0.03% right there at 9,491.13. Dubai is on the flip side, 0.27% in the green at 4,008.42. Still in the region. Saudi Arabia follows Abu Dhabi. It's down 0.03% at 11,710.20. Qatar is on the opposite side, 0.61% at 10,204.50. So we see mixed sentiment right there for the Middle East markets. Well, some good news from London, UK in general. I know Juliana started this conversation with Vladi during business morning. Juliana, good afternoon. So this fall in inflation numbers, I know you would always remind us this is for November. We are in December. At least it gives us a trend that may still be what we have now. What does it mean for Christmas, this drop in inflation?
Good afternoon, Inni. I think I've got to agree with you when you say this is good news. Certainly, this is good news for the Prime Minister Rishi Sunak and Chancellor Jeremy Hunt. It's been a very difficult month for the Prime Minister. Of course, the Rwanda deportation plan is still a headache for him. Yesterday, he had a 90-minute grilling with the liaison committee of MPs who have to scrutinise the Prime Minister. And one of the big topics yesterday was about his key pledges. He made them at the beginning of the year. One of them was that he was going to halve inflation, and he has absolutely done that. In fact, he's gone further than that. There was a dramatic fall in CPI from 4.6% in October to 3.9% in November. Now, of course, as you have quite rightly said as well, we've got to be cautious with data coming from the Office for National Statistics, because it's obviously not a forensic analysis. We are looking in the rearview mirror, but certainly this is potentially an idea of what is to come in 2024, which is growth in the UK economy. One of the reasons why there has been subdued growth is because things are costing so high. But with the CPI data released this morning from the ONS, we are seeing that across swathes of items, prices are dropping. This includes transport, recreation, culture, food, the cost of raw materials, and very importantly for UK motorists, a drop in the price of petrol and diesel. I think with the drop in petrol and diesel, we've got to be cautiously optimistic because, of course, we're seeing a swathe of attacks in the Red Sea, and that is likely going to affect petrol. BP, the big titan, the oil titan, said earlier this week that they won't be going through that route. So what does this mean in the future? Perhaps we might see an uplift, but certainly this is now going to offer much food for thought for the Monetary Policy Committee, who have, for 14 consecutive months, hiked interest rates up to 5.25%. For the past three meetings, they've kept the rates steady. Are we going to start seeing a fall? Perhaps we won't see it when they meet at Threadneedle before the end of the year, but certainly now, we're going to have to start seeing rates drop because, of course, they are putting up interest rates to combat inflation, but with the putting up of interest rates, it is shifting the burden of the entire economy to just a small percentage of people, and these are people that have got large loans. So we're talking about people who drive flashy cars, people who live in big houses. They're seeing what they're paying at the end of the month go up, quite eye-wateringly. So yeah, good news all round. Inflation at 3.9%. What does this mean for Christmas, which was your initial question? Hopefully it means turkey will be much cheaper, but we know it's not because these are not going to be reflected for some time, sometime soon, Inni.
Yes, but I see, Juliana, you're already in the Christmas mood, so this should mean that you have some news, or you have your ears close to the ground, even before it seeps to us. But anyways, let's go to the market and see if they're also in a Christmas mood yet.
Do you know what? Stocks are in a festive mood. That's obviously because of the surprise dip in inflation. I think markets are kind of priced in about a 4.3%. So to see the 3.9%, that has really cheered investors. The early euphoria has waned off on the blue chip index slightly, but still very much in positive territory. At intraday, the all share is up, up 0.61%. FTSE 100, that's up by 0.54%. The domestic market, that's up by 0.69%. Now, of course, when the FTSE goes up, because a lot of that stock is internationally focused, you typically see a waning of the pound. So it is down. It's trading down against the US dollar by 0.57%. The British pound is also down against the euro by 0.26% and down against the Japanese yen by nearly 1% at intraday, Inni.
All right, Juliana, thank you so much. I do feel like telling you Merry Christmas. I'll just wait for a bit. I'm sure we'll get there.
You can text me.
Okay, I'll do that. All right, now let's go to Europe, where attacks by the Houthi militants on ships on the Red Sea have disrupted maritime trade, forcing shipping and oil companies to reroute their vessels. Well, to tell us more about how this is affecting the EU, we have joining us Emily Leshner, joins us from Berlin. Hi, Emily, good afternoon. So maybe we should have a little bit of background on what's happening.
Thank you for having me, Inni. So in the past week, Iran-backed Houthi rebels in Yemen have fired missiles at container and oil ships traveling through the Bab el-Mandeb Strait into the Red Sea. Houthi representatives say the attacks are in response to Israel's strikes on Gaza and that they will not cease until Israel does. There hasn't been any major damage to shipping vessels so far, but understandably carriers are worried and want to protect their personnel and their fleet. So some of the biggest carriers like Maersk, Hapag-Lloyd, MSC, OOCL have said they will not use the Red Sea passage, and instead they'll use an alternative route going around Africa's Cape of Good Hope, which can take around 2 weeks longer. And a longer voyage means higher prices, which will likely be passed down to consumers. Now, carriers will have to spend more on fuel, on crew, and on operating costs. And there are also certain fees that are necessary for carriers during times of instability, like the war risk or emergency bunker surcharges. Now, analysts say that if the disruptions continue, shipping companies might be forced to lock in higher than expected rates and renegotiate long-term contracts.
So, Emily, what goods exactly are affected?
Well, an estimated 15% of world shipping traffic passes through the Suez Canal, which connects the Red Sea to the Mediterranean Sea. Just to put that into perspective, that's about 50 vessels a day. And as of Monday, at least 32 of those had to be diverted. Now, these vessels are carrying everything from consumer goods to fuel used for energy. And a huge amount of that energy is destined for Europe. Earlier this week, BP announced it's stopping all of its tankers from passing through until the security situation improves. And of course, all of this is having an effect on energy prices. Brent crude has risen more than 2% and a total of 5% since earlier this month. That's reversing a months-long slide in energy prices. Analysts at Goldman Sachs say if it continues, we could see an additional 5% jump. And Europe's benchmark price for natural gas has jumped nearly 8% so far. And then aside from critical energy supplies, the passageway is also a primary throughway for a plethora of other goods like grain, electronics, toys. There's petroleum used for plastics coming from the Middle East, auto parts coming from China, cotton coming from India, for example, just about everything you can think of.
Yeah, that's so dangerous right there. But let's see if investors are reacting.
Well, investors are waiting for inflation figures from Germany and Britain. Germany and the Eurozone will also be releasing numbers on consumer confidence, as will the U.S. later in the day. The latest data shows there's been an easing of price pressures in the Eurozone, but after a statement by European Central Bank President Christine Lagarde last week warning against complacency, investors are expecting additional rate cuts. And they're also expecting an early rate cut by the Federal Reserve.
All right, Emily, thank you so much for that. Well, we're still staying on that tensions on the Red Sea. Global shipping industry is bracing for the prospect of living without its most important trade routes for weeks, even as the U.S. works to pull together a task force to stop Houthi militants in Yemen from attacking commercial vessels. Shippers are still waiting for details, and they worry about implementation that the Houthis are attacking ships to show support for Hamas in its war against Israel. Let's delve more into this. We just heard Leslie there tell us about the impact on shipping companies. Of course, you also have issues of insurance and every other commodity that is affected right there. And we are having this conversation with Ted George, is a Chief Narrative Officer with Clearance Advisory from the United Kingdom. Hi, Ted. Good afternoon.
Great to be back. Good afternoon.
Good to have you back. So we've seen, or, at least read about the impact of this tension on the price of oil, supply and price. Now we are talking more about the ship. The ships are being rerouted. And of course, as Emily said, that's more hours on sea and more costs that will end up, at the footstep of the consumers.
Absolutely. And we've seen it already coming through in prices. If you imagine during the COVID lockdowns, there was a dramatic spike in the average cost for a container. It went from around $2,000 for a typical container to around $10,000, a five-fold increase. But in the last year and a half, as we've seen global supply chains recovering, it's back to down under $2,000. And so one of the first things we've noticed is just in the last few days, that started to spike again. The price is rising again. And this is a real concern. Now, it probably shouldn't affect Christmas in Europe. We saw, for example, a couple of years ago when the Ever Given ship got jammed in the Suez Canal for 12 days. That really did result in some people not getting their iPhones or their Xboxes for Christmas. That's not a worry now. Everything being sold for Christmas is already here, but we're going to see the knock-on effects coming through. And certainly it's not just, for example, BP saying that they're not going to be sailing through that area now. We've just heard that Greece has ruled that all of its ships shouldn't sail through there. Now, that's about 20% of global maritime traffic. So the knock-on effects are coming through. So far, we've seen, let's say, oil prices, they've nudged up a bit. They're back to $80 a barrel. That's roughly where they were before Russia's invasion of Ukraine. But of course, everyone's aware where this one could go. We're all watching very closely, because if that route is effectively shut to international shipping, it could have a huge knock-on impact. Availability of goods, but pushing back into prices, and dare we say, inflation coming back up again.
And talking about Europe, will this have an impact on the energy prices?
Absolutely. I mean, we already heard that we've seen gas prices going up again. As you can imagine, Europe went through a dramatic shock back in February 2022 when effectively Russian gas was cut off, a mixture between the Russians retaliating to sanctions by Europe. But if you bear in mind, Germany at the time was dependent for something like 90% of its energy needs from gas from Russia. Now, there was massive investment, particularly in LNG and regasification in Germany. They've reduced their dependency on Russian gas to about 2% now. But of course, a lot of this LNG gas was coming through the Suez Canal and through the Red Sea. So if that's got to be rerouted around the rest of Africa, a lot of it in ships that are never intended to sail this route, yes, that's going to have an impact. So certainly we could see, as the winter comes in, a rise in gas prices again. That's the last thing that the European economy needs.
The last thing that everyone wants, Ted. But what about insurance? Because, I mean, this ship we're talking about, they're insured. So, I mean, the risk increases. Insurance companies will also hike their premium.
Absolutely, and we've already seen that, by the way. We've already seen premiums being hiked, probably by 10 or 20-fold from a very, very small level indeed. And of course, it's not just about the insurers. I mean, if insurers say we will not insure shipping in this area, that cuts out a lot of trade. But on top of that, even let's say that if there is insurance, how many pilots are you going to find? How many shipping companies who say, yeah, we're going to put our ships at that risk? We already have an example of how this happens. If you think of the whole Russia-Ukraine situation, there was an agreement to allow grain to go through a protected corridor, but that deal ran out. Now, Ukraine has been managing to continue to make shipments, but only a few weeks ago, a ship was hit by probably a Russian missile. The pilot was killed. So are you going to be the one who says, oh, yes, I'll go, even though supposedly we have protection? So, yes, it's a big concern. Essentially, if insurers say we won't insure, that cuts out 90% of shipping ever leaving the port.
Wow, so sad, and sounds like if this is not stopped, it's dark days for the world in the coming months. It's not a good way to start 2024, but we hope it doesn't get to that. Thank you so much, Ted George, for sharing your perspective with us this afternoon.
My pleasure.
Let's take a break. When we come back, we'll stay some markets and then the African continent. Welcome back. Still watching Business Incorporated right here on Channels Television. Let's start from the United States, where stock futures hovered near flat line on Wednesday after major averages built on their strong rally to end 2023. S&P 500 futures inched 0.05% higher, while NASDAQ 100 futures inched higher by 0.13%. Futures tied to the Dow Jones Industrial Average slipped by 12 points. That's about 0.03%. Let's take some hours back and see Maria Bird tell us how Tuesday's trade ended.
The U.S. stock market had another winning day as the U.S. stock market showed signs of early onset of what might be a winning week for the 8th straight week in a row. This makes many investors hopeful that we could see interest rates decreasing by the month of March, even though the Federal Reserve has been very clear to state that their decisions will be all data-driven, and that we could even see interest rate hikes if the data does not show positive signs for potential decreases in interest rates. But investors still believe that the U.S. economy is in a better position than it was weeks ago, as the Dow Jones had its 5th straight record-setting day, closing at 0.7% up. The S&P 500 closed at 0.6% up, and the heavy tech NASDAQ also closed at 0.7% up. Many investors will continue to watch to see how the market closes out the year, but there is much to be hopeful from the end of the investors.
Let's go to Asia now, where markets rose on Wednesday with Japan stocks extending gains to another session after the country's central bank left its ultra-loose monetary policy unchanged at its final meeting for the year. The Bank of Japan kept interest rate at minus 0.1% while sticking to its yield curve control policy that keeps the upper limit for the 10-year Japanese government bond. Let's look at the numbers right there. Shanghai in the green at the close of trade, 1.03% at 2,902.11. S&P 200, that's of Australia, also in the green, 0.65% at 7,537.90. The Nikkei 225 also in the green, 1.37% at 33,675.9 for the Kospi at a smaller market right there, almost 2% in the green at 1.78%, 2,614.30. And HSI, the Hang Seng Index, is also green right there, 0.66%, 16,613.81. Now, oil prices ticked higher after rising more than 1% in the previous session on jitters over global trade disruption and geopolitical tensions in the Middle East following the Houthi attacks on ships in the Red Sea. Brent crude futures went up almost 80%. U.S. West Texas Intermediate crude was also up about $74.11. Still staying in the markets now, metals. Gold prices held steady after the key $2,000 level on Wednesday, supported by prospect of interest rate cuts from the Federal Reserve next year, while investors await U.S. inflation numbers, which is expected later on this week. Spot gold was a little change at $2,039.89 per ounce, and U.S. gold futures rose 0.1% at $2,053.20 an ounce. And last week, the Federal Reserve indicated its tightening phase was at the end and signaled that rate cuts are in the cards for 2024. Atlanta Fed President Raphael Bostic on Tuesday said that there's no current urgency for the Fed to reduce U.S. interest rates given the strength of the economy. Markets are pricing in about 75% chance of a Fed rate cut in March. Lower U.S. interest rates puts pressure on the dollar and bond yields, increasing appeal of non-yielding bullion. Spot silver rose 0.3% to $24.11 per ounce, while platinum gained 0.3% to $957.41 for an ounce. Palladium edged up 0.1% to $1,225.21 for an ounce. Now we'll go to Zimbabwe, where the International Monetary Fund, that's the IMF, has commended Zimbabwe's 2024 national budget, saying the fiscal policy and resource-generating measures will give impetus to economic growth for the attainment of national objectives. IMF country representative Mr. Carlos Cesera said that the central government's decision to assume the Reserve Bank of Zimbabwe's liability was commendable, as that will free the bank to concentrate on its mandate and help the country move towards firming its economy. Some of the quasi-physical operations IMF raised came after the United States imposed illegal sanctions under the Zimbabwe Democracy and Economic Recovery Act, which precluded IMF and other Bretton Woods institutions from extending loans to Zimbabwe. Now, Rwanda has launched a factory with an annual capacity to blend 100,000 tons of fertilizer. That's according to information from the Ministry of Agriculture and Animal Resources of the country. The Rwanda fertilizer blending plant is said to be up at Bugesera Special Economic Zone, which is located at Bugesera District, Eastern Province. The project is a joint venture under the Rwanda Fertilizer Company, which involves OCP Group, a Moroccan fertilizer manufacturing firm, and the government of Rwanda. And then back here in Nigeria, the establishment of forensics departments in public and private entities has become increasingly important to effectively combat fraud and corruption in the country. This was made known by stakeholders from the Chartered Institute of Forensics and Certified Fraud Investigators of Nigeria at the inauguration of the Institute's chapter in Lagos. According to the chairman of CFIN, Honorable Olubode Oni, as fraud continues to be perpetuated, professionals will be needed.
Fraud. There will be fraud at all times. There is not anybody can do, there will be fraud in any economy. Once there is an economy, there will be fraud. But how it is dealt with, the will to deal with fraud is what matters. We collaborate with the existing institutions like EFCC, like SSS, like ICPC, like CBN. We will help the banks to establish forensic departments, well equipped with forensic equipment, well staffed with experts. We are up to that standard to help them if they are willing.
The Institute is trying to stop gap for the depth in the skills of forensic auditors that we have in the country. And we want to use this opportunity to also bring all stakeholders to the table to be able to showcase the skills that we have in-house instead of the experience that we have in the past, whereby we need to import forensic auditors and experts into the country to actually carry out these skills. We're now in-house, now in Nigeria. We now have professionals from accountants. We have special skills who are actually now true Nigerians, homegrown, who are empowered, who has the skill, can actually bring this to the table.
Well, on the note of combating fraud, we close the program for today. Thank you so much for being a part of Business Incorporated. A fresh episode comes your way tomorrow at 1:30. Let's make it a date. I'm Ini John Mekwa. Enjoy the rest of your day.